Good evening, my dear students, and welcome to this particular session of financial management. And our faculty is already there, CA Dweep Shah, who is a rank holder in CA examination, and I think you will definitely enjoy his classes. And as far as the topic is concerned, today we'll be having the second class of investment decision, which is the capital budgeting in popular terms. So when we are talking about the function of financial management, there are three kind of decisions we take. One is the financing decision, another is the investment decision, which we'll be going through, and then the dividend decision will be coming. Obviously, short-term decision, there is working capital management. And exactly these are the components of your syllabus. Now, a couple of things before, our faculty will start the session, let me tell it to you that you should be very, very careful that, different kind of concepts you need to learn in this capital budgeting. Obviously, we know that there are two ways of evaluating various proposal of capital budgeting. One is with the present value, another is without present value. And we know that accounting rate of return payback and discounted payback, that is with the help of present value, NPV, PI, and IRR, which is internal rate of return. So these are some of the techniques which are required you to learn in this. A couple of things you should be very, very careful that what is the depreciation technique which has been used in the question. Whether there is a block of asset, whether it is depreciated based on the written down value or WDV, or it is on the straight line basis. A lot of things is going to change based on the depreciation technique you are going to follow. So in the examination, you should be very, very careful about this. And then the another thing which is very important is the capital gain. So how the capital gain is going to be arrived, how it is going to be treated, and how it is going to be dealt in the real examination condition, that is going to be another thing which you should be looking for. Okay, so different kind of questions which comes in this particular chapter. And what is the beauty of this chapter, that almost one question will definitely coming in the examination. It may be in the form of case scenario, it may be in the form of a descriptive question, MCQs, etc., etc. So these are a couple of areas which I thought I should tell it to you. And first, you learn your concepts. Sir is already telling you different concepts, how it is to be evaluated and all. And then after learning the concept, you practice a number of questions. Practice as much as possible. Study material question, the question which will be given by the faculty member, the questions which will be uploaded as an assignment by the faculty, MTP question, RTP question, everything you please past few years questions. So whatever the sources are available, you please practice those questions. Okay, and then obviously when you will be appearing in the mock test paper, you try to understand your time management, whether you are able to manage the time or not. Okay, any specific queries you have, one of our colleague will be there throughout with you along with the faculty member. So along with the faculty, the BUS faculty also will be there, and definitely anything related to the board of studies or examination as such will be answered. So that's briefly, if possible, maybe in the next class, I will try to give you some of the examination related tips of this particular chapter. And now I'll request our faculty, Suyadip Shah, to take it over and take the students through this particular session. And thank you very much once again, Suyadip, for your contribution.
Yeah, thank you, Sen Gupta sir. It was a very nice, briefly summarized. You have briefly summarized and introduced everything. So thank you for such a brief explanation, for brief summary. Okay, so students, a very good evening. So let's start with our today's session. Today is our second class of investment decision. Is my screen visible to you all? Yeah, okay, thank you. So before starting today's session, let me just give you a brief insights what we have covered in our previous class. So the first thing that we covered was the objective of this investment decision. What is the ultimate objective? Why investment decision? That we saw. Secondly, we understood the concept of time value of money. Third, we started with different techniques. And I guess we have completed payback period technique. We have completed discounted payback period technique. We have completed accounting rate of return. And we have completed, not 100%, but at least 60-70% we have completed with NPV technique. So let's take the class forward and let me give you a brief or a short illustration so that you get better clarity on NPV. See, as I told you in previous class as well, NPV is the highly used, widely used and widely accepted technique in practical corporate world. So let's get some more clarity. Let's take some numbers and let understand in better terms. Okay? So I will take an example from your module. Everyone, please open your module 2, investment decision, page number 28. Illustration number 3. Now, how to solve question on NPV? We will learn that. How should we approach the question on NPV? We will learn that. See, we are a students of professional course. So solving just by solving on Calci or in some unorganized manner will not help you. You are a professional course student. Your way of solving should also be in an organized professional manner. So we will understand how to approach any question on NPV or how to solve it in a presentable form. Okay? So for that, let's take a small illustration. Illustration number 3, it is on page 28 of your module 2, investment decision. Compute the net present value for a project with a net investment of 1 lakh. Means, can I say this is my cash outflow of 1 lakh? And the net cash inflows for year 1 is 55, for year 2 is 80, for year 3 is 15,000. The company's cost of capital is 10%. So in other words, can I say this is the discounting rate? That question is given to you directly. Yes or no? Correct? So now, NPV. The formula of NPV, it is nothing but present value of cash inflows less present value of cash outflows. Correct? If NPV is positive, we will accept the project. If it is negative, we will reject the project. This was the simple decision criteria of NPV technique. Understood? Now, how to calculate present value of cash inflows? It is nothing but discounting your cash inflows using the concept of time value of money. So, can I say in other words, my PVCI would be 80,000 divided by 1.1 raised to 1. Sir, ये क्या किया? I am discounting the future values. ऐसे कर रहे थे? Then, for year 2, it is, sorry, for year 1, it is 55,000. For year 2, it is 80,000. And for year 3, it is 15,000. 55,000. For year 2, it is 80,000. And for year 3, it is 15,000. This is how we have learned in our previous session. Yes or no? Yes, correct. But, see again, I told you that we are a student of professional course. Now let's understand a different format of solving the same thing. This 55,000, can I write it this way? 55,000 into 1 divided by 1.10 raised to 1. ऐसे भी लिख सकता हूँ? Yes or no? The answer would remain same. Likewise, 80,000 can be written as 1.10 raised to 2. 80,000 into 1 divided by 1.10 raised to 2. And similarly, 15,000 can be written as 15,000 into 1 divided by 1.10 raised to 3. Yes or no? Now, friends, now please pay attention. Huh? This thing, 1 divided by 1.10 raised to 1. Can you solve it on Kelsey? Tell me, क्या आंसर आ रहा है? Tell me. Just this part, जो मैंने सर्कल किया ना, the one that I have highlighted in green. Just that part. Tell me, 1 divided by 1.10. 0.909 आया? Everyone is getting this? Yes or no? 0.90, yes, correct. अच्छा, 1 divided by 1.10 raised to 2. बोलो, what is the answer? 0.826, correct. And 1 divided by 1.10 raised to 3. 0.751. 0.751. So friends, this 0.909 or this 0.826 or this 0.751 is technically called as present value factor or discounting factor. Are you getting this? What is this technically called as? Present value factor or discounting factor. So in some of the questions, this discounting factor will directly be given. Okay? So you have to just multiply the cash inflows with that discounting factor. Are you following? Are you following? So in this question, can you see they have directly given the discounting factors? So you have to just multiply cash inflow of year 1 with 0.909. You have to just multiply cash inflow of year 2 with 0.826. Are you getting this? So this PVIF is nothing but the discounting factors that they have directly given in the question. Hope everyone understood this. Okay? So this is how we will prepare. Working note number 1. Calculation of present value of cash inflow. Just understand the format. Column 1 would be for year. Column 2 would be for cash inflows. Column 3 would be for discounting factor. And since the rate is 10%, so discounting factor at 10%. And column 4 would be present value of cash inflows. Okay? Year 1, 2, and 3. Cash inflows 55,000, 80,000, 15,000. Discounting factor already given in the question 0.909, 0.75, 0.826, and 0.751. So simply multiply the cash inflows with discounting factor. You will get PVCI. करो कितना आ रहा है? 55,000 into 0.909. I have to use my mobile phone for calculator. 55,000 into 0.909. 49,995. So almost around 50,000. 80,000 into 0.826. 66,080. 15,000 into 0.751. 11,265. And the total of all is how much? 49,995 plus 66,080 plus 11,265. 127,340. So this is my total present value of cash inflows. My outflow, my initial investment given in the question is how much? 1 lakh. And since 1 lakh has been incurred today itself, so we don't need to discount that. Initial investment is always assumed that it will be incurred at the start of the project. So 1 lakh, I will subtract it and my NPV comes to positive 27,340. Did you follow, friends? This is how you solve it in a presentable format. This should be your way of solving NPV ka questions. By preparing table. Are you following? Any doubts, students? So since NPV, our advice to the company would be, since NPV is positive, company should go for the project. Okay? But the purpose of taking this question is to explain you what is discounting factor. Are you getting this? Discounting factor मतलब क्या, वो समझा आपको? ठीक है? Now my question to you. ये डिस्काउंटिंग फैक्टर का टोटल मुझे करके बताओ ना. प्लीज टेल मी द टोटल ऑफ दिस डिस्काउंटिंग फैक्टर. टोटल 0.909 plus 0.826 plus 0.751. Please tell me the total of this thing. Total of discounting factor 2.486. This 2.486 is called as present value annuity factor. It is called as present value annuity factor. सर इसका काम क्या आएगा? When the cash inflows, ये कब काम में आएगा पता है? When the cash inflows every year is constant ना, then PVF factor will be very helpful to you in solving or in calculating PVCI very quickly. Sir, समझ नहीं रहा है. We are not able to get this. Okay. Did you understand first of all what is PVAF factor? Present value annuity factor. It is nothing but summation of all the discounting factors. ठीक है? Simple. It is nothing but summation or accumulation of all the discounting factors. Sir, what is the need of calculating PVAF factor? When will we use this? So I told you, you can use PVAF factor when cash inflows per annum are constant. When this cash inflow table is constant na, then you can directly use PVF factor. Sir, कुछ numbers लो तभी समझ में आएगा. Okay, let's take a number. Let's say my initial investment in the project is 1 lakh. ठीक है? My cash inflows are constant per annum. Let's say 65,000. Life of the project is 3 years. WACC is 10%. So 10% is my discounting rate. They have given you discounting factor at 10% for year 1, for year 2, for year 3. ठीक है? 0.909, 0.826, 0.751. Okay. Now, if we solve it by the way that I explained you just now, then your way of approach would be, you will first prepare a column of year. Then you will write down the cash inflows per annum, which is 65,000. Correct? Then you will multiply it with the discounting factor of each year, 0.909, 0.826, 0.751. And then I will calculate the present value of cash inflow. Bolo, for year 1, it is how much? 65,000 into 0.909. 59,085. Then 65,000 into 0.826, which comes to 53,690. And then 65,000 into 0.751, 48,815. So can I say my total PV CI comes to rupees 59,085, 161,590. Okay? This is the normal way of solving that I have explained you just in my previous illustration. Now, can you see the stream of cash inflows are constant per annum? Every year, cash inflow मेरा 65,000 ही है. So when cash inflows per annum are constant ना, there is one shortcut way of solving. ये पूरा टेबल बनाने की जरूरत नहीं है. There is one shortcut way. Let's understand that approach. Tell me, can I say this 2.486 is my PVAF factor, summation of all the discounting factors? So you simply multiply 65,000 with PVAF factor. You will get this answer. करो कैलकुलेट. आ रहा है, वही आ रहा है. 65,000 इंटू 2.486 आ गया 161,590. ठीक है. So to explain, the purpose of explaining you the concept of PVAF factor is that you have a shortcut way of calculating PVCI. But the only condition is cash inflows per annum has to be constant. Are you following? So the outcome or the conclusion is, if the cash inflows per annum are not constant, then simply follow this table, prepare this table. Okay? But if cash inflows per annum are constant, then you can simply multiply the cash inflow per annum with the PVAF factor. Are you getting this? So this is nothing but cash inflow per annum, multiply it with PVAF factor. ठीक है. सो आपको पता होना चाहिए कि डिस्काउंटिंग फैक्टर मतलब क्या. डिस्काउंटिंग फैक्टर इज फॉर इंडिविजुअल स्पेसिफिक ईयर्स. पीवीएफ फैक्टर मतलब क्या. पीवीएफ फैक्टर इज समेशन ऑफ ऑल द डिस्काउंटिंग फैक्टर्स. ये सब पता होना चाहिए. एंड दिस विल हेल्प यू in another concept that we will learn in the coming time. Understood, friends? Any doubts, any concerns in discounting factor, in annuity, present value annuity factor, when to use PVF factor? Bolo, any queries? Is it simple to understand? Yes, sir, it is simple. ठीक है. So with this, let's take another illustration so that NPV is very much clear to you all. Let's take another illustration from the module itself. So can you see the answer is 27,340, and since it is positive, company should accept the project. Let's take illustration number 4. ABC Limited is a small company that is analyzing different capital expenditure proposals for purchasing a equipment. So the company is evaluating whether it should buy an equipment or not. ठीक है? The budget is 5 lakh and company believes that it is the maximum capital that it can raise. So this is the upper limit. Company can raise maximum up to rupees 5 lakh. The initial investment of each project are shown below. So this is for project A, initial investment. Your cash outflow is 2 lakh. For project B, your cash outflow is 190. Likewise for C and D. Cost of capital is 12%. So again, this is the discounting rate. You are required to calculate the NPV of different projects. Okay. So we have to calculate NPV for project A, for project B, for project C, for project D. I will help you in calculating NPV for project A and project B. But project C and project D you have to calculate as your homework. हाँ? आपको homework में करना है वो. So हम project A and project B का class में करेंगे. C और D आप homework में करना है. Okay, so let's calculate NPV first of all for project A. अगर मैं एकदम ध्यान से देखूं ना, so I can see that the cash inflows per annum for project A is constant. देखो, तीखी नजरों से देखो. Is it constant every year? Yes. So in that case, no need to prepare the entire table. Just quickly calculate PVA factor and multiply it with 50,000. Yeah, are you following? Are you following or not? And how to calculate PVA factor? It is nothing but summation of all the discounting factors. Okay? Summation of all the discounting factors. So discounting factor for year 1 would be 1 divided by 1.12 raised to 1 plus 1 divided by 1.12 raised to 2 plus 1 divided by 1.12 raised to 3 plus 1 divided by 1.12 raised to 4. 5 years hai, plus 1 divided by 1.12 raised to 5. So summation or cumulation of all the counting factor is my PVF factor. बोलो कितना आ रहा है? Calculate and tell me. Calculate and tell me. You can take up to 4 decimals, huh? 0.8929. Oh, 3, you have already calculated. 3.6048. Nice. My job is done. 3.6048. So can I say PVCI for project A would be 50,000 multiplied by 3.6048, which comes to 6048 multiplied by 50,000. 180 to 40. And initial investment is how much project A requires? Initial investment of 2 lakh. Oh my. Negative. Minus 2 lakh. 19,760 negative. So will you accept this project or not? As per NPV criteria, if NPV is negative, just reject the project. Okay? So project A should be rejected. Let's calculate NPV for project B. Let's calculate, yes, 19,761 for project B. Now the cash inflows per annum are not constant in this case. ठीक है ना, तो हम टेबल बनाएंगे. We will prepare that format. Year 1, 2, 3, 4, 5. Cash inflows. Cash inflows is denoted as CI, huh? In short terminology. We will save time. 40, 50, 70, 75, 75. 40,000, 50,000, 70,000, 75,000, 75,000. Then we will multiply it with the discounting factor, which is at 12%. 0.8929. And you have already calculated the discounting factor for each year. Huh? So tell me, for year 2 kitna hai? For year 2 it is how much? .7972. 0.7972. For year 3, 0.7118. I am not solving this on Kelsey. I am believing you. I have faith on your calculations. 0.6355. 0.6355. And for year 5, it is 0.5674. 5674. So simply multiply this with each year's cash inflow and tell me what is the total of PVCI. Solution dekhe bina. I know you all are very smart. You will just scroll down and just see the solution. Tell me the total present value of cash inflows. Two 215,620. I hope everyone is getting this. Okay, 215. Okay, Ananya is 215,620. Kevin also has 215,620. And if we subtract initial investment of project B, which is 190. So for project B, NPV is positive 25,620. Okay. So since NPV is positive for project B, company should go and accept the project. Understood, students? So for project C and D, you will do it as your homework, as your assignment. Okay. So I took few illustrations just to give you better clarity on NPV, to explain you what is discounting factor, to explain you what is PVAF factor, when to use PVAF factor, how it will help in future. So that's the reason I took some illustration and tried to explain. आगे बढ़े लाइफ में? Any doubt still here? For project C and project D, as your homework. ठीक है? Now let's move to another technique called as profitability index. Short form is PI. Profitability index is also called as desirability factors. So sometime in question, they will ask you to calculate desirability factor. It is nothing but profitability index. Sometimes they will mention calculate present value index. It is again nothing but profitability index. Okay? So it has three names, but the meaning is one and the same. The formula of NPV was PVCI less PVCO. Correct? The formula of PI is nothing but PVCI divided by PVCO. इतना ही फर्क है. The variables are same. The variables under NPV and profitability index are same. You have to just use PVCI and you have to just use PVCO. But NPV में we used to subtract, and PI में we used to, we will divide it. ठीक है? So let's take our previous example only. For project B, हमारा PVCI कितना था? 215,620 and PVCO कितना था? 190. 215,620 divided by 190. So my profitability index for project B comes to, calculate करो कितना आ रहा है? 1.1348. 1.1348 raised to 1. Sir, calculation करना तो आ गया. The formula is very simple. But what does this mean? How to interpret this 1.1348? The interpretation is also very simple. It means how much cash inflow? How much cash inflow? Please listen carefully. Yeah? How much cash inflow my 1 rupee of investment is generating? So it is generating 1.1348 rupees of cash inflows on my investment of 1 rupees, but in present value terms. Are you following? 1 रुपया डालने में, प्रोजेक्ट में 1 रुपया डालने से कितना मुझे रिटर्न मिल रहा है? So I am getting a return of 1.1348 but in present value terms, not in absolute terms, because we are taking the present value of CI and present value of CO. Are you following? So बोलते ना एक का 2 हो गया, एक का 3 हो गया, एक का 5 हो गया, that is profitability index, but in present value terms. Is everyone following? Very simple to interpret. So tell me, higher the PI or more than 1 it is desirable, or less than 1 it is desirable? Tell me. PI should be more than 1 or less than 1? What does your logic say? More than 1. Obviously more than 1. You would want more on your investment. Na? So the decision making criteria for PI is very simple. PI is greater than 1, accept the project. Because 1 rupee of your investment is generating more cash inflows in present value terms. Huh? And PI less than, sorry, not 0, but 1. Reject the project. Are you following? Did you understand PI technique? Very simple. What does PI technique explain you? How much cash inflow is generated by investment of rupees 1. But again, in present value terms, that is in relative terms and not in absolute terms. This is the explanation of PI index. Yeah, NPV and PI goes hand in hand. NPV and PI goes hand in hand. It is one and the same. And PI is also used in one of the situation called capital rationing. We have to learn it in very detail कि PI कब काम में आएगा. There is a situation called capital rationing. And under that situation, we give more preference to PI. But we will explain, we will learn that at later stage. But as of now, you understand that PI and NPV goes hand in hand. Why? Because the variables are same for both the techniques. ठीक है? But under one situation, we'll prefer PI over NPV. And that situation is called capital rationing. And what is capital rationing? Keep it for a later stage. So can you see if PI is greater than 1, the decision rule is accept the project, and less than 1, reject the project. Let's try to solve illustration 5 for better clarity on PI. Suppose we have 3 projects involving discounted cash flow of rupees 5,50,000, 75,000 and 1 crore 20,000. So there are 3 projects. The present value of cash outflow for project 1 is 550. The PVCO for project 2 is 75. And for project 3 is 1 crore 20,000. Suppose further that the sum of discounted cash inflows. You have to pay very attention to all the content of the question. Isme directly they have given the discounted cash inflows. Means can I say they have directly given the PVCI, present value de diya hai. This is not the amount of cash inflows. This is present value of cash inflows. Okay? So read the question very carefully. So for 3 projects, PVCI 650, 95 and 1 crore 30,000 respectively. Calculate desirability factor. As I told you, desirability factor is nothing but PI index, profitability index. Project A. My PI would be 650 divided by 550. 650 divided by 550. They have directly given you the present value. Huh? They have directly given you the PVCI. They have not given you cash inflows. So discount mat karna. 1.181. So we should accept this project since PI is more than 1. For project B, 95 divided by 75. 1.1267. So again, we can accept project B as well since PI is positive. Sorry, it is greater than 1. And for third project, almost 1. 0.7895. How come 0.7895 किसी का 0.7895? Ananya, you are doing some mistake, I guess. Because numerator is greater than denominator in all the 3 scenarios. So it has to be more than, yeah, okay. 1.0099. So again, since it is greater than 1, we can accept project C as well. Okay. So this is how you calculate PI, profitability index. And it has more relevance in a situation called capital rationing. Now, what is, I am again reiterating, what is capital rationing? It is a separate topic. We will learn it separately. But right now, don't mix it up or else you will get confused. There are many concepts to be learned in this chapter. Yes, it is better to accept. Yes, it is better. As far as decision making is concerned, we are making decision based on financial factors. We are not considering non-financial factors in our decision making. As far as FM is concerned, सिर्फ हमें financial factors देख के decide करना है कि project में जाना चाहिए कि नहीं. There are many other non-financial factors involved practically, which can change your decision. जैसे for example, I can give you one example कि ये मान लो this project is having positive NPV and PI, but this project is in Gaza, जहाँ war चल रहा है. So it is very likely कि आपकी company नहीं चलेगी वहाँ. So there are certain non-financial factors also that practically financial manager has to consider. But as far as academic is concerned, our decision making rule will always be based on monetary terms. ठीक है? NPV is 0. Okay. So that is our next technique. I will come to that. When does NPV comes to 0? That is our next technique called IRR. वही सीखने वाले हम आगे. But right now, everyone understood PI, profitability index. Any doubts, any queries till here? And if NPV is 0, then it is up to the company whether to accept or not. Company को project करना है. Sometimes even loss-making projects are accepted by the company. Why? Because it may create a good image. It may create your brand in the market. It may add some value in the market to attract more customers or to get known in the market. Then also company takes some projects which are loss-making. But these all factors are non-financial. And in FM, we would be considering financial factors in our decision making. Okay, let's move now. Okay. Next technique, internal rate of return. Internal rate of return. Short form is IRR. We denote it as IRR. ठीक है? First of all, this technique will help you in calculating some rate. It is rate of return. So the ultimate answer of IRR would be denoted in percentage because we are calculating rate of return. It will not calculate any absolute amount for you. It will calculate a rate that is in percentage terms. ठीक है? What is IRR? IRR is the rate, is the discounting rate. Rather, it is not the rate, but the discounting rate where your NPV is zero. Means no profit, no loss situation. It is the discounting rate where your NPV of the project comes to zero. So can I say NPV zero means my present value of CI is just equal to present value of CO? Yes or no? तभी NPV zero होगा. Are you getting this? So in other words, IRR is that rate which equates your present value of cash inflow with present value of cash outflow. Correct? Are you getting this? So क्या वो 10% पे my present value of inflow will be present value of outflow? क्या वो 15% पे my PVCI would be equal to PVCO? क्या वो 20% पे it will be both will be equal? We need to find that. Are you following? हमें वो discounting rate ढूंढनी है. We need to find the discounting rate where PVCI is equal to PVCO. Are you following, friends? We have to find that rate. कैसे find करेंगे? Now the question arises, sir, how to find that rate? How to find that rate? Very simple. We will use trial and error method. We will use trial and error method. मतलब कि first we will start at 10%. We will consider our discounting rate at 10%. And we will check whether NPV at 10% comes to zero or not. If it is not coming to zero, then we will jump to other rate. We will calculate NPV at, let's say, at 15%. Whether my PVCI is equal to PVCO at 15%? No. Then again jump to some other rate. This is how we will calculate IRR. But IRR का आपको मतलब समझा? It is the discounting rate. It is not an amount. It is the discounting rate where your NPV comes to zero. And NPV zero means it is that point which equates PVCI to PVCO. Any doubt in meaning? How to calculate, I will explain you. Don't worry in that. But matlab samjha? You need to understand the meaning as well. Clear? So IRR, when IRR comes into your mind, IRR, NPV 0, PVCI is equal to PVCO. This should run in your conscious. IRR, NPV 0, PVCI should be equal to PVCO. We have to use trial and error method. ये conscious में चलना चाहिए. Understood? So now let's take an illustration and learn how to find IRR using trial and error method. ठीक है? Our module is designed very beautifully. They have covered all the concepts very beautifully. So they have explained you the meaning of the concept, then they have given some illustration, which is a good way. So always follow your module. You should treat your module as Bible. So let's take illustration number 6. ठीक है? I will explain you in a very logical manner. A Limited is evaluating a project involving an outlay. Outlay is nothing but outflow of rupees 10 lakh, resulting in an annual cash inflow of 2,50,000 for 6 years. Okay? So my cash inflows is 2,50,000 for 6 years. Assuming salvage value of the project is 0. Okay. Determine the IRR of the project. What we need to calculate? We need to calculate the IRR, internal rate of return. So IRR is the discounting rate that we need to find where NPV is 0. And how to calculate IRR? I said that we have to follow trial and error method. You will understand this very logically. So let's take our trial 1 where discounting rate is at 10%. I would always suggest start with 10% only. You start your race from 10%. Okay? So let's assume our discounting rate is 10% and let's calculate NPV. हम देखते हैं, check करते हैं कि 10% पे हमारा NPV 0 आता है कि नहीं. Okay? So let's take cash inflows multiply by PVAF factor. Sir, why PVAF table क्यों नहीं बना रहे हो सर? ये cash inflows per annum are constant. Can I say cash inflows for 6 years is 250? So I can directly multiply it with PVF factor and find my PVCI to save time. Yes or no? So 2,50,000 into PVAF factor. PVF factor at 10% for 6 years. Can you calculate PVF factor for me? I hope by now you know how to calculate PVF factor. It is just the summation of all the discounting factors. And यहाँ पे discounting factor है हमारा 10%. So can you help me in calculating PVF factor? What is that 10, 20, 30%? समझा रहा हूँ. You will understand in this illustration. Don't worry. By now, I hope you know how to calculate PVF factor. ये सबका अलग क्यों आ रहा है? हाँ, 4.3553 is common. So I assume that is right. 4.3553. Tell me, what is my total PVCI? Tell me, 250 into 4.3553. 250 into 4.3553. 1088. 825. Okay. Less PVCO. My initial outlay is 10 lakhs. Yes or no? So my NPV comes to positive 88825. So tell me, क्या ये 10% मेरा IRR होगा? Will this 10% be my IRR? Yeah, obviously not, because I need NPV of 0. But at 10% it is coming positive. So 10% is definitely not my IRR. Are you following? Yes or no? So let's move to trial 2. Can I say I need to now decrease this IRR? मुझे ये my NPV को मुझे गिराना है. I have to decrease this NPV to bring it to 0. Yes or no? So to bring down your present value, can I say I have to increase my discounting rate? Because higher the discounting rate, lower would be my present value. Yes or no? Are you following? Logically, this is mathematical concept. To bring down your present value कम लानी है ना, तो discounting rate बढ़ाना पड़ेगा. They are always inversely proportional. So to bring down this 88,825, my second trial has to be more than 10%. It cannot be less than 10%. It has to be something more than 10%. तभी present value गिरेगा. Then only present value will fall down. ठीक है? So trial 2 has to be anything about 10% because you have to bring down your present value. So let's take trial 2. When my discounting rate is 15%. I usually take a jump percent and it is acceptable. 5% ka gap jump is okay. You can also take 12%, you can also take 13%, you can also take 14%, you can also take 20%. Any trial you can take, but it has to be more than 10%. Okay? But gap, I would suggest keep a gap of 5%. So now let's again calculate PVCI at 15%. So can I say it is nothing but 2,50,000 multiplied by PVAF factor of 15% at 6 years? कितना आ रहा है? 3.7845 is my PVAF factor. Multiply by 3.7845. 3.7845 multiply by 250. 946, 125. 946, 125 less PVCO, which is 10 lakh. $946, okay, 125, 121 is okay. Minus 10 lakh. 946, 125 minus 10 lakh. 53,875 negative. 53,875 negative. हाँ सर, एक में पॉजिटिव आया, एक में नेगेटिव आया. थक गए सर, अब कितने ट्रायल करें? But, ठीक है, now what should we do? Tell me. और ट्रायल करें? हाँ सर, अब 15% के नीचे लाना पड़ेगा. But, let me explain you. My job is done. Bus, I will, with my 2 trials, my job is done. I will able to find my IRR. Now we don't need to do any trial. Sir, कैसे NPV का 0 है? Sir, NPV is not 0. So how 2 trial में हो गया? Logic. When my discounting factor was 10%, can I say it was my NPV was positive 88,825? Yes or no? 88,825 था. And when I increased my discounting rate to 15%, मतलब 5% से जब मैंने discounting rate बढ़ाया, my NPV came to negative 53,875. Yes or no? बोलो, any doubt still here? Any doubt still here? I am preparing a timeline. So can I say 0, NPV 0 would lie somewhere between 10 and 15%? Yes or no? Something more than 10, but something less than 15. इतना तो sure हो गया. It will lie somewhere between 10 and 15% in the timeline. Yes or no? Tell me. Quick response, huh? Correct? So now we will use the concept of interpolation. Interpolation. What is interpolation concept? So when I say my IRR, it is for sure that it is 10 plus something. 10 के ऊपर है and it is 10 plus something. It is sure, for sure. Stamp लग गया है. ठीक है? Now we will use the concept of interpolation. When I increased my IRR, not IRR, but discounting factor. When I increased my discounting factor by 5%, my NPV fell down. By how much? Can I say 88,825 तो गिरा plus 53,875 और negative में गिरा? Are you following? When I increased my discounting factor from 10 to 15%, that is when I increased my discounting factor by 5%, देखो मेरा NPV fell down by 88,825 first, plus additionally it fell down by 53,875. Yes or no? So can I say by increasing the rate by 5%, my NPV fell by 140 to 700? Yes or no? NPV fell by 140 to 700. दोनों का डिफरेंस मत लेना. 88,825 minus 53,875 मत करना. It fell by 140 to 700. First, this positive came to 0 and then 53 or negative, it fell. Are you getting this? Following? Yes or no? And I want to just bring down my NPV, or I just want to fall it by 88,825. Yes or no? To bring it to 0, my target that this NPV should only fall by 88,825. So how much percentage I need to increase? Just cross multiply it. Are you getting this? So 88,825 multiply by 5 divided by 142 700. कितना आ रहा है? 88,825 multiply by 5 divided by 142 700. 3.11. 3.1123. So my IRR is somewhere between 13%. 13.1123%. Are you getting this? Again, I am explaining you. Again, let me explain you this entire part once again so that it is very clear. When my discounting factor was 10%, my NPV came positive 88,825. Then my trial 2 was at 15%. When I calculated NPV at 15%, it came to negative 53,875. So can I say NPV of 0 would obviously be somewhere between 10 and 15%? मतलब 10 के ऊपर होगा and 15 के नीचे होगा? Yes or no? So 10 plus something is for sure. उतनी surety हो गई that IRR is 10 plus something. Now how to calculate that something? We will use the concept of interpolation. What does interpolation says? That when you increase the discounting factor by 5%, your NPV fell by 140 to 700. How 140 to 700? So 88,825 says 0 and 0 say negative 53,875. So when I say it fell down by 140 to 700. But I just want that my NPV falls by 88,825. Because if it falls by 88,825, it will come to 0. So I just want that it falls only by 88,825. Okay, so how much rate I need to increase? This is interpolation. So you just cross multiply. And I have to increase it by 3.1123. Are you following? So at 13.1123%, at 13.1123%, your NPV would always be close to 0. If you want to verify, you can verify. You can verify as well. Let's calculate NPV at 13.1123%. Okay? So again, cash inflows per annum are constant. So PVCI would be 250 multiplied by PVAF factor of 13.1123% for 6 years. ठीक है? So calculate कितना आ रहा है? It will be equal to 10 lakhs. देखना. हाँ, some rounding difference would be there. But it will almost be equal to 10 lakh. So now this is our trial 3. And trial 3 is at 13.1123%. Calculate कितना आ रहा है PVF for 13.1123%. $3.9851. Okay. Almost everyone is getting 3.9851. $3.9851 multiply by 250. Okay, so almost it comes to 10 lakh. Almost it comes to 10 lakh. So it is around 13%. Okay, it is around 13%. And if you want a perfect, देखो, it is around 13%. Can you see the rate? And if you want more close answer, then your gap has to be less than 5%. I have taken a gap of 5%. If you want more close, more better estimate, then your gap has to be 2%, 3% ऐसा. ठीक है? So approximate my IRR is 13%. And if you want more close estimate, then take less gap. Understood? But did you understand the concept of IRR? हमने यहाँ पे 4 डेसिमल तक या 2 डेसिमल 3 डेसिमल तक लिया इसलिए बाकी इट वुड कम एग्जैक्ट. $88,825 because I just want my NPV to fall it by 88,825. Na? That's why I wrote. See, again, I'm explaining. When I increased my discounting rate by 5%, that is 10 से 15 तक, I increased my discounting rate by 5%. So by increasing discounting rate by 5%, my NPV fell by, first is 88,825 and then another 53,875. Are you getting this? So NPV fell down by 140 to 700. But I want to reach at this point, na? I want to reach at 0. So I have to fall my NPV only by 88,825. So that's why I wrote 88,825. If NPV falls by 88,825, my job is done because it will come to 0. So that's why I wrote 88,825. Understood? Bolo, any concerns, students? And if some students, if you are not able to recollect the concept of interpolation, then I will give you a simple formula of IRR. It is not simple, rather it is complicated, but you can remember this formula and solve IRR. IRR is nothing but lower rate plus NPV at lower rate, LR is lower rate, divide by NPV at lower rate minus NPV at higher rate, HR is higher rate, multiply by higher rate minus lower rate. This is the formula of IRR. अगर मैंने आपको ये फॉर्मूला पहले दे दी होती ना, विदाउट एक्सप्लेनिंग यू द कॉन्सेप्ट, तो मजा नहीं आता. You would not be able to remember this formula. But this formula is entirely derived from this concept of interpolation. This formula is derived from this concept, interpolation. Let's check. Can I say my lower rate in my trial is 10%? My higher rate in my trial is 15%. My NPV at lower rate was 88,825. My NPV at higher rate was minus 53,875. Yes or no? So just substitute this value on the above formula and you will get the same answer. Okay? So IRR is equal to, the formula is lower rate, 10 plus NPV at lower rate is 88,825. 88,825 divided by NPV at lower rate is 88 again 825 minus NPV at higher rate. NPV at higher rate is minus 53,875. So again minus NPV at higher rate 53,875. The whole multiply by higher rate minus lower rate. Higher rate is 15, lower rate is 10. Karo? So it comes to 10 plus 88,825 divided by 142,700 into 5. When I say the bracket ka answer is 3.1123, 13.1123%. So approximate 13%. Okay? So the formula is entirely based on this interpolation का concept. इसी में से formula derive करिए. But if you are not able to recollect this concept, then you can memorize this formula and solve it. Answer would be same. But again, the logic is very simple. Yeah, it is very simple. You have to just calculate that by increasing the discounting factor rate, how much my NPV falls. So it falls to 142,700 in our present case. But I just want that my NPV falls by 88,825. So how much rate I need to increase? This is the interpolation ka concept. This interpolation ka concept we have used in payback period also. So it's very simple and logical. Understood, everyone? IRR. Okay. Now how to interpret IRR? ये 13% आया. So in that case, my NPV is 0. Correct? So can I say this is the maximum rate of return that project can generate? मतलब कि this project का capacity is to generate 13% only. Maximum capacity of this project is to generate 13% return. This is how you interpret IRR. Are you getting this? The maximum capacity of the project, the maximum earning capacity of the project is 13%. So let's say your desired rate of return, let's say you want that नहीं at least मुझे 15% तो चाहिए इस project से. So will you accept or reject this project? Tell me. Your desired rate of return from this project is 15%, but the maximum capacity, that is IRR, is 13%. So will you accept or reject? Tell me. Reject, yes, because you need more. You are expecting more from this project. So this is how you use IRR technique. Okay? Understood how you interpret IRR? IRR is the maximum earning capacity of the project. Are you getting this? So if you want more than IRR, then this project is not for you. Go for some another project. Are you getting this? So you compare IRR with your desired rate, with your expected rate of return. So if your expectation is more than IRR, then this project is not for you. Are you getting this? Following? With this, we have completed 6 techniques. Payback period, discounted payback period, ARR, NPV, PI, and IRR. Are you following? Any questions still here? Any doubts, any concerns? I'm waiting for a minute. Do you have any doubts till now? IRR, logically, everyone understood how to use interpolation technique. Don't memorize the formula, rather go behind the logic. See, this is the formula. Let's take another illustration, illustration number 7, so that IRR is very much clear to you all. Okay? Calculate the IRR of an investment of 136, which yields the following cash inflows. So these are the stream of cash inflows for each year. And now the cash inflows are not constant. Outflow is 1,36,000. So again, our starting point has to be 10%. वो हमारा फेवरेट रेट है, इंस्टीट्यूट का भी फेवरेट है, मेरा खुद का भी फेवरेट है. ठीक है, so we will start with 10%. Trial 1. NPV when discounting rate is equal to 10%. Since cash inflows per annum are not constant, we will prepare a table. And how much is the life of the project? 5 years. Cash inflow 30, 40, 60, 30, 20. 30, 40, 60, 30, 20. Are discounting factors given directly in the question? Nahi diya hai, then you have to calculate. So discounting factor for trial 1 would be at 10%. 0.909, 0.826, 0.751. ये 3 मुझे याद था. Tell me for year 4. .683. .621. Okay. So my total PVCI comes to. Now just multiply cash inflows with discounting factor. And tell me the total PVCI. $138,280. And my PVCO is 136. So it NPV at 10% is 2280 positive. Yes or no? Now my question to you. My next trial should be more than 10% or less than 10%? Batao. My next trial should be more than 10% or less than 10%? More, because I want to bring down my present value. So I have to take a higher discounting rate. So again, it is your choice whether you take a gap of 2%, whether you take a gap of 3%, whether you take a gap of 5%. But don't take, I would always advise you, don't take more than 5% ka gap. Okay? Don't take more than 5% ka gap. 5% is okay. So next trial 2, NPV when discounting rate is, you can take 12%, you can take 13%, you can take 14%, you can take 15%. But I would strongly suggest don't take a gap beyond 5%. So let's maintain uniformity and let's take a gap of 5%. So again, format would remain same here. 1, 2, 3, 4, 5. Cash inflow 30, 40, 60, 30 and 20. Now the discounting rate is 15%. By now you are very much able to calculate discounting factors. Huh? अब तो आना ही चाहिए. So my total PVCI comes to, chalega. Now don't give me discounting factor of individual years, just give me the direct final answer. Now I trust you कि आपको ये तो आता ही होगा. Discounting factors calculate करने तो आते ही होगा आपको. Now I have faith on you. So just to save time, give me the total PVCI. You give me PVCI, I give you PVCO. बस मैं आपके लिए ये कैलकुलेट करके देता हूं. PVCO is 136. $122,815. ठीक है, किसी ने राउंडिंग ऑफ किया है, किसी ने नहीं किया है, बट दैट्स ओके. अच्छा 122, it's somewhere 122 800, somewhere between 800 and 900. I'm waiting for other students as well. अच्छा 880, ओके. 880. You can take discounting factors up to 4 decimals. Huh? You can even take at 3 decimals. You can even take at 2 decimals, but write a note on it that calculations are taken up to 2 decimals. Just mention a note about it. Nothing is wrong. FM is very practical. Okay, so let's take PVCI at 120 to 880. So when I say my NPV comes to negative, कितना negative आ रहा है? 120 to 880 minus 136. 13,120. 13,120. Okay. So NPV was positive 2280 at 10%. Yes or no? And at 15%, it came to negative 13,120. So 0 would again be somewhere between 10 and 15. Yes or no? So can I say the answer is 10 plus something? Now again interpolation. If I increase my discounting rate by 5%, then my NPV fell down by 2280 plus 13,120. Yes or no? 5% बढ़ाने से मेरा एनपीवी कितने रुपए से कम हो गया? तो 2280 प्लस 13,120, 15,400 से कम हो गया. But I would suffice if it just falls by 2280. Because मेरी requirement क्या है कि ये 2280 तक ही गिरे. I want that NPV falls only up to 2280 so that it comes to 0. So how much rate I need to increase? Again cross multiply. 2280 multiply by 5 divided by 15,400. 2280 multiply by 5 divided by 15400. 0.74. 17.74. No, it's just 0.74. 0.7403. So my answer is 10 plus 0.7403. 10.75% approx. Okay. So my IRR comes to 10.75%. And you can also solve it by that IRR ka formula. Lower rate plus NPV at lower rate is 2280. NPV at lower rate 2280 minus NPV at higher rate is minus 13120. Multiply by higher rate, lower rate. हाँ चलेगा because the reason is of that decimal ka thing. Someone would have rounded off to 4 decimals. Someone would have taken the entire decimals. So utna farak to hoga. So don't worry in that. That is okay. But just write a note that calculations are up to 4 decimals or calculations are up to 3 decimals. So here in the solution, we have taken a gap of 2%. But that's fine. That is also okay. So answer is IRR is somewhere between 10.73% or 10.74%. 10.77574. Okay. So with this, we complete IRR technique as well. Any doubts? With this, we have completed 6 techniques. Okay. Now, let's take some special cases. Let's understand some special situations. First of all, let me explain you the meaning of the term mutually exclusive. Mutually exclusive projects. Hey, anyone wants to try? What do you mean by mutually exclusive projects? What do you mean by the term mutually exclusive? Tukka maro. No, we don't get a break in a 3-hour session. Huh? If you want, you can personally take a break, but session will continue. Mutually exclusive is not related to each other. Opposite. You said related with each other. No, mutually exclusive is एक दूसरे से कोई लेना देना ही नहीं है. Means let's say company has multiple project A, B, C, D, E, F. And of this, let's say all the projects are having positive NPV. All the projects are having positive NPV. But what does mutually exclusive project say? If the question says all the projects are mutually exclusive, tell me which project we will select. So we will select that project which has highest NPV of all. Mutually exclusive means you have multiple options, but you have to select the best one. This is the meaning of mutually exclusive. You have multiple options, but you have to select the best one. So कौन सा select करेंगे? The project which has highest NPV. ठीक है? So mutually exclusive in simple term means you have multiple options and you have to select the best one. So we will select that project which has highest NPV. This is just like an arrange by range thing. You have multiple options, multiple candidates, but obviously you have to select one which is best for you. So those are mutually exclusive candidates. Or this is the same principle, the same analogy applies in project as well. ठीक है, multiple options with positive NPV, but you have to select the best one. Yes, accepting one, rejecting others. Perfect. Now this is correct. Accepting one, rejecting others. Okay. Now, why did I explain you this? A very simple purpose. So there are certain situations, or I would say certain scenarios where NPV and IRR would be giving conflicting answers or conflicting results. Sir, क्या मतलब इसका? There are certain scenarios, certain cases where, as per NPV, let's say there are two projects, mutually exclusive two projects, A and B. So either you have to select A and either you have to select B. So as per NPV, let's say your answer comes that project A should be selected. But as per IRR technique, it will say go for project B. So under what scenarios there is conflict between NPV and IRR? Let's understand that. There are three situations where your NPV would be giving different answer and where your IRR would be giving different decision making or would be giving different answer. So let's say there are two projects, mutually exclusive projects, A and B. Select तो एक ही करना है. NPV of project A is 10,000 positive. NPV of project B, let's say it is 15,000 positive. So as per NPV criteria, we will go for project B because it is having higher NPV. Yes. Now let's say IRR of project A comes to 15% and IRR of project B comes to 10%. So can I say as per IRR technique, we should go for project A? So can I say there is conflicting results, conflicting answers between two techniques? तो ऐसा कौन से सिचुएशन में, कौन से सिनेरियो में होगा? We will understand that. This is more of a theoretical part, but you should know कि when NPV and IRR are giving conflicting answers. Are you following? Hey, are you trying to understand what I'm saying? I'm waiting for your response. आगे बढ़े. So, situation one. Situation one. First situation is when the size of both the projects is different. So let's say project A, initial investment or the amount of outflow required is 150. And let's say project B requires 15 lakh of investment. So when there is a disparity in size, difference in size of the project, then both the techniques would give different answers. This is situation one. You have to just understand that कौन से situation में answer अलग आएगा. So first situation is when there is size disparity between both the projects. So it is bound by both the techniques to give different answer. So if you want to check this, Institute has given an illustration as well. You can check it as a homework. Huh? I will tell you कौन से page में. It is on page number 45. Scenario 1, when there is size disparity. So NPV and IRR would give conflicting answer. And then they have given illustration as well to explain you so that you get better clarity. So project A is of 1 lakh, project B is of 3 lakhs. Okay? So let's directly move to the conclusion. You can calculate NPV and IRR. By now you know how to calculate NPV and IRR. Yes. So you can calculate NPV and IRR for both the projects in your homework. And let's right now move to the conclusion. देखो, project A का NPV is 25. Project B का it is 59,300. So as per NPV technique, go for project B. As per IRR, go for project A because it has higher rate. Means the earning capacity, the maximum earning capacity of the project A is more than project B. Yes or no? So this is scenario 1. When there is disparity in size. Understood? When there is disparity in the size of the projects. One project is of smaller size, one project is of higher size as far as investment is concerned. Okay? So this is scenario 1. This might be asked in your theory as well. Huh? Situation 2. Situation 2. When there is disparity in the timing of generation of cash flow. In the timing of generation of cash inflows. First situation was size disparity. Second situation is timing disparity. Means one project, again, there are two projects. One project is generating major cash inflows in the initial years. Let's say this project is of 1,50,000 and this project is of 1,60,000. My initial outflow is denoted by negative sign. So project A generates majority of cash inflow in initial years. The life is 3 years. And project B generates cash inflow more in later years. So something like this, 20,000, 30,000, 1,50,000. So when there is disparity in the timing of generation of cash inflow, again, both the techniques would give different answers. Are you following? One project is generating more inflows in the initial year itself. And one project is generating more inflows at the later years of its project life. So in that scenario, in that situation, your NPV and IRR would give conflicting answer. Okay? Are you following? So scenario 2, timing disparity in cash flows. Again, they have given you illustration to prove their point. So can you see there is project X and project Y. Project X is costing 2,50,000 and project Y is costing 3 lakh. So under project X, see here, majority of cash inflow is getting generated at initial years. And for project Y, majority of cash inflow is getting generated at the later years. So there is timing disparity in generation of cash inflows. So both the techniques would give conflicting answers. So again, you can check this as homework because you know how to calculate NPV, you know how to calculate IRR. You can check this as your homework, but right now let's move to the conclusion. So देखो again at NPV, as per NPV technique, go for project B. And as per IRR technique, it says go for project A. Are you getting this? So both the techniques are giving conflicting answers. When there is size disparity, when there is timing disparity in cash inflows generation. Following? Any queries still here? You can solve this as homework, as your assignment. Okay? And there is one more situation. Situation 3. When the life of two projects is completely different. So disparity in life. Third is disparity in life. So project A, let's say it is of 3 years. Project B, let's say it is of 7 years. And you have to select one from these two projects. So again, it will give conflicting results because the life is having disparity. So there are three scenarios, three situations when IRR and NPV would give conflicting answers. दोनों में आंसर अलग अलग आएगा. Size disparity, timing of cash inflow disparity, and life disparity. ठीक है? So sir, चलो मान लिया disparity है and both are giving conflicting answers. But tell me which project shall we select? Even though there is conflicting answers, we have to make a decision. We have to take a decision. We should go for which technique? So always go for NPV technique because it is more practical and logical. Are you getting this? Because NPV technique uses the discounting rate which you desire. याद करो session 1. Please recall your session 1. I told you how is I explained you how the discounting rate is determined. It is determined as your desired rate. If not the desired rate, then the industry rate. Are you getting this? So NPV technique is more practical because it discounts the cash inflow at your desired rate. Whereas IRR is the maximum earning capacity. So we are not concerned with maximum earning capacity. हमें कितना चाहिए? We are concerned with that. And NPV uses that discounting rate. Are you following? So always give priority to NPV. Understood? If decision has to be made. But right now we are just understanding different scenarios where NPV and IRR would give conflicting answers. So scenario 1, size disparity. Scenario 2, timing disparity. Scenario 3, life disparity. Well, any queries? But still you have to make any decision, then go for NPV because it is more practical. It uses your desired rate for discounting of cash inflows. फिर maximum earning capacity कुछ भी होने दो. We are not concerned with maximum earning capacity. There is a factory which has a budgeted capacity of production of 2 lakh units. Okay? And we are just producing 1 lakh units. So our P&L, we are concerned with this and not budgeted capacity. Are you getting this? हम कितना production कर पा रहे हैं? We are concerned with that. It is relevant for us and not the maximum production or the budgeted capacity. Understood? So this is scenario number 3. Disparity in life, unequal life. So again, they have given an illustration. See, can you see? Project A has a life of 1 year only. And project B has life of 3 years. So again, in this scenario, if we see the conclusion, both would be giving conflicting answers. So as per NPV, go for project B. As per IRR, go for project A. So again, there is contradiction in ranking by two methods. Understood? So these are the 3 different scenarios or situations where NPV technique and IRR technique would give conflicting results. Okay? Any doubts? Any concerns in this topic? Can we move forward? Can we move forward now? Okay. So next concept. Next concept. This is again a special scenario, again a special case. How to decide when life of the two projects are unequal. When life of two projects are unequal. How to deal with this scenario? See, when lives are unequal, ideally, they are uncomparable. Let me give you a simple logic. An IQ of grade 3 student cannot be compared with IQ of grade 10 student. They both are uncomparable. एक तीसरी क्लास में पढ़ने वाला बच्चा का IQ और 10वीं क्लास में पढ़ने वाले बच्चे का IQ is both different. You cannot compare that. So ideally, logically, the same analogy applies here. If one project is of 3 years and one project is of 15 years, ideally they are not comparable. We have to make them comparable. We have to bring them at par. Are you following? Ideally, at prima facie, in first instance, they are uncomparable. If both the projects are having unequal life, they are uncomparable. We have to bring them to comparability. We have to bring them at par. So how to bring them at par? There are two methods. First is replacement chain method. Second is equivalent annualized criteria. In short, we denote it as EAC. Yeah, are you following the logic? कि there are two projects with unequal life. दोनों की life same नहीं है. So at first instance, these projects are not comparable. They cannot be compared. If you want to make it comparable, you have to bring them at par. And how to bring them at par? We have two methods. One is replacement chain method and one is equivalent annualized criteria. We have to bring both the projects ka life at par. Then only it can be comparable. Otherwise, it cannot. Understood? So now we have to learn these two methods. See, this is not a technique. Huh? This is special cases. Now we are learning capital budgeting ke special scenario, special cases. We still have to learn one more technique, which is modified internal rate of return. But before that, let me explain you some special considerations of this chapter, which are very logical. Okay? So again, when life of the two projects are unequal, at first instance, they are totally uncomparable. They cannot be compared. Okay? To make it comparable, we have to bring their life at par. And how to bring their life at par? We have two methods. One is replacement chain method. One is equivalent annualized criteria. So let's understand the concept of replacement chain method. What does this method say? It is very simple. Let's take an example. There are two projects, project X, project Y, mutually exclusive. Okay? Project F, X का life is 3 years. Project Y का life is 6 years. Okay? Outflow is 1 lakh, 1,20,000. Cash inflows is, let's say, 50, 30, 40. I'm just taking random numbers. Huh? खुद के बना रहा हूं. 6, 30, 20, 15, 35, 40, 25. So there are two projects, project X with 3 years ka life, project Y 6 years ka life. The pattern of outflow and inflow is as follows, as you can see on the screen. Now what replacement chain method says? It is very simple. To make the life equal now, can I say if I take entire project X twice, it will be equal to project Y ki life. So now it is comparable. Yes or no? So replacement chain method says that take entire project X twice. So it will get comparable to project Y. इसका मतलब क्या कि you have started project X today, it will end at 3 years. Again, and take the entire project X after the end of 3 years. Means 3 साल के बाद again invest 1 lakh in the project and you will generate 50,000 of inflow in year 4, 30,000 in year 5, 40,000 in year 6. This is what replacement chain method says. Take the entire project again. So it will be equal to the life of project Y. And then calculate NPV. Now it is comparable. Now it is comparable because both the project is now having same life. Now calculate NPV and then decide which project you should go for. Are you following? Replacement chain method. Likewise, tell me, chalo, again there are two projects, project X and Y. Project X ka life is 2 years and project Y ka life is 3 years. So what replacement method will say? Sorry, not 3 years, but 6 years. Let's take to 6 years. What replacement method will say? Ki take entire project X 3 times so that the life of project X and project Y is now comparable. Are you following? Not equal, but comparable. Take the entire project 3 times and make it equal. Then calculate NPV and then decide. If life, yeah, I was about to come to this point. But पहले ये समझा what replacement chain method means. Are you getting? You have to just repeat the projects. You have to take on the projects multiple times. Are you following? Now my question to you. ये तो मैंने simple examples दिए. Now my question to you. Life of X and life of Y. Let's say life of X is 3 years. Life of project Y is 5 years. बोलो कैसे करेंगे? We have to find the LCM. Simple. Take project X 5 times and take project Y 3 times so that it becomes equal. LCM find करना है. Understood? So if you take entire project X 5 times, तो 15 years हो गया. And if you take entire project Y 3 times, तो 5 years, 5 years, 5 years, 15 years हो गया. It is comparable. Now, are you following? Are you getting this? Bolo, any doubts? Question to you. अब बताना. Life of project X, life of project Y. Life of project X, let's say 11 years. Life of project Y 13 years. बोलो क्या करेंगे? What is your opinion? Tell me. What is your opinion? LCM, okay. LCM 11 into 13. मतलब कि 143. Yes or no? 143 years. Means take entire project X 13 times. Take entire project Y 11 times. Can I say this will be a very frustrating task for financial manager? Do you think इसके अलावा उसके पास कोई काम नहीं होगा? So can I say this method has certain limitations? This is the limitations. You cannot keep on solving for 143 years. The LCM is 143. इतना टाइम नहीं है फाइनेंशियल मैनेजर के पास. That involves so much complexity. So to remove this deficiency, to resolve this deficiency, we go for next method, which is equivalent annualized criteria. Can I say the above job is very tedious? If 143 LCM, you don't have so much time practically. So this is the limitation of replacement chain method. Are you getting this? That when the life of two projects, the LCM is very high, then this method becomes impractical, becomes involvement, becomes complex and tedious. Are you getting? So to resolve this deficiency, we have a very practical method called equivalent annualized criteria, which is our next method. Are you following? First of all, replacement chain method, clear? Replacement chain method meaning clear? Its limitation, disadvantage is clear. Any doubt in replacement chain method? उसका एक एग्जांपल है, let's see that. It is on page number 55. It is on page number 55. So there are two projects, project A and project B. They both are with unequal lives. Project A is of 6 years, project B is of 3 years. Okay? So ideally, both are uncomparable because of their unequal life. To make it comparable, I have to bring their life at par. So first method is replacement chain method. So when I say if I take entire project B one more time, that is twice, so it will be comparable to project A now because दोनों की life 6 years हो जाएगी. So this is what they have done. So take entire project B once again. Means कि year 3 में आप वापस 20 lakh invest करो. Year 4 में you will generate a cash inflow of 7 lakh. Year 5 में you will generate a cash inflow of 13 lakh. Year 6 में you will generate a cash inflow of 12 lakh. Are you getting this? Is everyone following? And then decide which project you should accept. So first method they have taken is replacement chain method. Can you see? This is the chain. So they have taken the entire project B once again. Year 3 में you invest 20 lakh again. Year 4 में 7 lakh cash inflow generate होगा. Year 5 में you will generate cash inflow of 13 lakh and year 6 में 12 lakh. Are you getting this? And then calculate NPV. And then compare. Understood? And then decide. But as I told you, when the LCM is very high, in my example, it is 143. So it is very impractical to solve it or to take entire project X 13 times and take entire project Y 11 times. It is very impractical for financial manager. So in that scenario, we use second method, which is equivalent annualized criteria. And equivalent annualized criteria का simple formula है. It is nothing but NPV of project X, NPV of project Y, divided by PVAF factor. Divided by PVAF factor. Are you following? Simple formula. NPV, you take respective NPV of projects and you divide it by PVAF factor. Now, by now, you know how to calculate PVAF factor. Yes or no? So you just divide it by PVAF factor and then decide. So let's take an illustration. Let's take an illustration. This illustration only. Let's take this illustration only. ठीक है? इसमें तो NPV कैलकुलेट करके दिया है. So तो मजा नहीं आएगा. तो let me give you another illustration. उसमें तो NPV कैलकुलेट करके ही दिया है. Let's consider two project X, project Y. ठीक है, प्रोजेक्ट X का लाइफ इज 3 years, प्रोजेक्ट Y का लाइफ इज 5 years. My discounting rate WACC 12% for both the projects, means my desired rate is 12%. Outflow टू लाख 3,50,000. ठीक है, इनफ्लो 1 2 3 4 5 45 32 68 85 and 50. Oh, sorry, this is for 3 years, na? Project X is for 3 years. 0 0. Let me increase this 132 and 168. ठीक है, यहाँ पे 50 125 130 210 and 45. So these are stream of cash inflows. Now one way is you use replacement chain method, that is take entire project X 5 times and undertake entire project Y 3 times. But again, it will be very time consuming and impractical. So we have moved to second method, which is equivalent annualized criteria. And the formula is NPV divided by PVF. Yes or no? So let's calculate NPV of project X. Working out one. Calculation of NPV for both the projects. Let's calculate simultaneously. Here 1, 2, 3, 4, 5. Cash inflow for project X is 45, 132, 168. Discounting factor at 12%. So when I say discounting factor for year 1 would be 1.12. Sorry, 1 divided by 1.12 raised to 1. For year 2 it would be 1 divided by 1.12 raised to 2. Bolo na? In this question, please give me the discounting factors. Individual discounting factors, please. 0.893. 0.797. And 0.712. Sorry, 0.636. So my PVCI for project X would be कितना आ रहा है? Plus 0.797 plus 0.636. How much is my PVCI coming? Third is 0.712. Second, acha, okay, third is 0.712. So my PVF would be 0.893 plus 0.797 plus 0.712. 2.402. 2.402. And what is my PVCI coming to? 264,987. 264,987. So my NPV comes to rupees 264,987 minus 2 lakh. Positive 64,987. ठीक है? Yeah, any doubt still here? No doubt, because we have simply calculated NPV for project X. Likewise, please calculate NPV for project Y. NPV for project Y. Year 1, 2, 3, 4, 5. 50 cash inflow. 50, 125, 130, 210, 45. Again, discounting factor at 12%. For 3 years, you have already helped me 0.893, 0.797, 0.712, 0.636 and 0.567. 0.567. So PVCI comes to plus 0.636 plus 0.567. PVAF comes to 3.605 and PVCI comes to please do the multiplication and tell me the total of PVCI. I am waiting for your answer. $395,816. 395,910. Okay. 395,910. So my NPV for project Y comes to 395,910 minus 3,50,000 is outflow. So can I say 45,910? Correct? But NPV of project A is 64,987 and NPV of project B is 45,910. But at this point, you cannot decide for which project you should go. No, because I told you life is unequal. So at first instance, it is uncomparable. So at this point, straight away, you cannot decide that, sir, project X NPV is higher. We should go for project X. No. You cannot decide at this stage. I told you we have to make the life equal. We have to bring it at par. So to bring it at par, we saw replacement chain method. Now we are learning equivalent annualized criteria. So equivalent annualized criteria for project X. Can I say the formula is NPV divided by PVAF? NPV is 64,987. PVAF is 2.402. 64,987 divided by 2.402. This is for project X. Likewise, for project Y, NPV is 45,910 divided by PVAF factor is 3.605. बोलो कितना आ रहा है? 64,987 divided by 2.402. 27,055.37. 45,910 divided by 3.605. 12,735. Now you decide whether you should go for project X or project Y. Okay? So since equivalent annualized criteria of project X is more, you should go for project X. Sir, but here 27,055, we learned how to calculate, but we are not able to understand what does that mean. How to interpret this 27055 and 12735? That also you have to learn, na? See, calculation is simple. You will get marks if you are able to solve this. But as a financial manager, you should know the logic behind this. How to interpret this 27,000 or how to interpret this 12,735. So again, it is very simple. See, this 64,985, 987 जो NPV आया है ना, this is NPV for the entire project life. That is, this NPV is for the entire life of 3 years. Are you getting this? And this 45,910 is for the entire life of 5 years. This is not 1 साल का NPV. This is for the entire project. Means project wise for 5 years. Then this NPV is for the entire 5 years. Are you getting this? And when we divide it by PVAF, this gives you an average NPV per year. कि मेरा NPV every year on an average कितना होगा? This is what equivalent annualized criteria explains you in a very simple layman terms. Are you following? कि my 64,987 is for the entire life, but on an average per year in present value terms, my NPV is 27,000. Can I say this is also per year and now this is also per year? Now it is comparable because we have brought it down to per year comparison. Are you following? This 12,735 is the NPV on an average per year generated by project Y. This 27,055 is an NPV on an average generated by project X per year. Are you getting this? So this both values are per year. And now it is comparable. एक साल में प्रोजेक्ट एक्स ऐसा मान लो कि 27,000 कमा के दे रहा है इन प्रेजेंट वैल्यू टर्म्स एंड प्रोजेक्ट वाई ऐसा मान लो कि इट इज एबल टू जनरेट 12,735 per year in present value terms. So obviously we will go for that project that generates more return per year. Yes or no? So this is the concept of equivalent annualized criteria when the life is unequal. Are you following? How to interpret this 27,000 and how to interpret this 12,735? Is it clear to you all? Calculation is very simple. Formula is very simple. But how to interpret that? That is also equally important and that you should know. Understood? So we have brought down the comparison to per year basis. Replacement chain method में उल्टा था. 3 का 6, 3 का 18, 11 का 13, 13 का 11 ऐसा करते थे. But this we are bringing down to per year basis. Just for easy understanding. ठीक है? Are you following? Well, any doubts? So since project X equivalent annualized criteria is more, company should go for project X when both the projects are mutually exclusive. Are you following? Any doubts? Simple था. So these are the steps of equivalent annualized criteria. Compute, first step is compute the NPV. हमने भी वही किया, we calculate NPV for project X and project Y. Second step, compute the PVAF factor, which is nothing but summation of discounting factor. Again, we calculated that. Third step is divide NPV by PVAF and compare the values. Okay? So again, this illustration is homework for you. Huh? You have to calculate the NPV for project A and project B. Okay? And you have to advise which project company should select. So by just normal calculation of NPV decision mat le lena because life is unequal. You have to bring them at par using replacement chain method and using EAC method. Okay? So this would be your homework. और इसमें इन द प्रेजेंट सिनेरियो ये एनपीवी तो दे दिया है, बट यू कैलकुलेट बाय योर सेल्फ। हाँ, ऐसा समझो कि ये एनपीवी नहीं दिया है क्वेश्चन में, एंड यू ट्राई टू सॉल्व इट बाय योर सेल्फ, यू ट्राई टू ब्रिंग दिस एज योर आंसर। ठीक है, अंडरस्टूड? So see, NPV at 12% for project A is 649,094. For project B, it is 515,488. PVAF factor at 12% for project A's life, which is of 6 years, comes to 4.112. And for project B's life, which is of 3 years, comes to 2.402. So equivalent annualized criteria means per year NPV, project A is generating of rupees 157,854, whereas project B is generating per year NPV of 214,608. So we will go for project B. No, we need to show in solution. Huh? You need to show it in solution, or else in working note as well, because working note also forms a part of your answer only. But working note be proper होना चाहिए. It has to be proper, not like we do as a rough calculation. वैसा नहीं होना चाहिए. Understood, my dear friends? Any concerns, any queries? Is there possibility wherein all the three disparities we need to analyze in projects at a time? Means, can you explain me in more easy language, because I am not able to get your question. Means ऐसा बोल रहे हो कि तीनों डिस्पैरिटी एक साथ ही होगी ऐसा? हाँ, इट इज पॉसिबल ना, इट इज क्वाइट पॉसिबल. जैसे यू कैन सी हियर project A and project B, size is different, life is different, so it is possible. There is no standard rule or thumb rule, it is possible. So when size is different, when life is different, can I say as per NPV technique project A is coming, and as per IRR technique project B is coming, so it will give you conflicting answer only. ठीक है? So let's quickly discuss illustration number 16, and let's calculate payback period, NPV, IRR, and PI. Let's calculate this using these four techniques for any one project or any two project as the time permits. Okay, so let's calculate for project B. Project A and project C, you do it as homework. Project A और C homework में करना. Project A में cash inflows are constant per annum, so you can directly use PVF factor for NPV and PI index. Let's calculate for project B. How much is the discounting rate? Cost of capital is 10%. Cost of capital is 10%. So again, payback period. Payback period का format क्या था? First we write the years, then we write cash inflows, then we prepare a column of cumulative cash inflows. ठीक है? I think we have very less time now. We just have 5 minutes. So let's take for project C because the life is less. and we don't have time as well. So let's do it for project C. Year 1, 2, 3, 4. 2, 3, 4. 2000, 2000, 2000, 1000. 2000, 2000, 2000, 1000. So payback period, simply prepare the cumulation cash inflow ka table. 2000 till year 2, my project has earned 4,000 rupees of cash inflow. Till year 3, it has earned 6,000. And till year 4, it has earned 7,000. Outflow, my initial investment is of 5,000 rupees, correct? So payback period means the time within which my original investment gets recovered. So can I say 5,000 is getting recovered somewhere between year 2 and 3? Yes or no? Yes or no? So can I say it is 2.5 years? Sir, डायरेक्ट कैसे कैलकुलेट कर लिया? डायरेक्ट कैसे कैलकुलेट कर लिया? In the entire time frame of 1 year, in the entire time period of 1 year, my company has earned 2,000 rupees in the form of cash inflows. Yes or no? But I just want an additional earning of 1,000. पूरे एक साल में 2,000 company has earned between year 2 and year 3. But it is enough for me if I earn just 1,000. So that my initial investment gets recovered. So can I say it will take half a year? 2,000 के लिए पूरा एक साल, तो 1,000 के लिए half a year. So can I say payback period comes to 2.5 years? Simple. Yes or no? Yes. Next is NPV. So here you can multiply it, or let's prepare a table only separately so that no confusion is there. Cash inflow 2,000, 2,000, 2,000, 1,000. Discounting factor 10% है. So I remember 0.909, 0.826, 0.751, 0.683. And my PVCI is the total of all the individual cash inflows multiplied by discounting factors. बोलो कितना आ रहा है? Quick, quick. We just have 2 minutes now. Tell me, PVCI. Five six five five. 5656. Okay. Less PVCO, which is of 5,000. So whereas my NPV comes to positive 655. Yes or no? Third is PI. PI is nothing but present value of cash inflow divided by present value of cash outflow. Simple. 5655 divided by 5,000. कितना आ रहा है? 5655 divided by 5,000. 1.131. And IRR, again, you can try it at your home as homework. Means at 10%. See, I will just give you the way, the path. At 10% it is positive, right? So to bring down this present value to 0, I have to increase my discounting rate. Yes or no? So next trial would be at 12% or at 13% or at 14% or at 15% as you like. Okay? So once you calculate NPV at 15%, let's say at 15%, and if it is negative, then do that interpolation thing and find the IRR. Followed, everyone? So with this, I end today's session, and before we close this, Vivek sir would like to conclude. So Vivek sir, You can take over.
Thank you so much, Advib sir. It was again a very nice and interactive session. Advib sir always make it a point to interact with the students as much as possible. And the major things which he have covered is the NPV. He taken the NPV forward and try to explain this that NPV should be in a presentable format. And he has also touched upon how to calculate cash inflows when the lives are unequal. There are unequal lives. And he has also mentioned that profitability index, that is PI, is preferable in the capital rationing, which obviously he will discuss later. And then he come to the mutually exclusive projects, and the aspect which is touched upon lately is the NPV and IRR, which are giving conflicting answers. And he has also very well explained the various concepts regarding projects which have unequal lives. So it was overall a very nice session. Students, one thing I want to touch upon is the aspect of the capital gain actually. And I will took a brief little time to explain it in the context of the when the terminal net cash flow is actually calculated. That is, for example, if a project is having a life of 5 years, so at the end of the 5 years, say the salvage value is or the scrap value of the particular machinery. From say year one it is 1 lakh, and at the end of the fifth year it is about 10,000. So from 10,000, that scrap value, for example, is sold at rupees 12,000. So it has sold for a higher value from 10,000 to 12,000. So obviously the capital gain is rupees 2,000. So from this 2,000, there is a short, let us say, capital gain tax of 30% is suppose is levied. So 2,000 into 30%, it is coming to actually about 600. So this 600 is actually cash outflows because that much taxes paying because of the capital gain. So it is while calculating the terminal cash flow, this particular 600 rupees is deducted from the cash inflows because the salvage is actually cash inflows. So and it is cash outflows rupees 600. So the 600 will be deducted from the total amount of 2,000. Conversely, let us say again the same example, the salvage values will be 10,000 at the end of the 5 years, and it is sold for say at a loss about 8,000. So capital loss is 2,000, that is 10,000 salvage value less the selling amount, which is 8,000. So the losses, capital loss is 2,000. From this 2,000, if 30% tax is calculated, it is coming to 600. So this 600 is actually the cash inflows because it is tax saving. So it will be added to the salvage value. So briefly, I want to touch this point also. And on this note, I am we are ending this session. Thank you so much, Deep sir, for such an interesting session. Thank you again. And thank you, you students also, for the patient listening and participate very sportingly. Thank you. Thank you so much.
Thank you. Thank you all the participants, and special thanks to Vivek sir for concluding so well.
Thank you. Thanks again.
Yeah.
Over.